Hello everyone, this is Tim Davis coming to you guys from the Bullish Bears team. Today is October the 13th, 2018, and this is my weekly long-term trades update video. Okay, I'm going to go over a little bit in this video, not much that I have to update from last week. Yeah, it is quite a bit I have to update last week, but it'll be pretty quick. All right, as you guys know, last week was a very, very volatile week in the market. So with that said, I looked at some longer-term charts in the S&P and the Dow Jones and decided to close a lot of positions and totally revamp my portfolio. So here we go. Closed positions this week. I closed ETE, XLP, Disney, KMI, AMRS. Those are my closed positions this week. And you can see the details here. So you can review the details at your leisure. I'm going to the next screen. Next screen. These are my current active trades. GLD, which is a gold ETF, I'm bullish on that. CNTTF, still bullish on the marijuana sector, and that's my marijuana pick. And EEM, I'm still bearish on EEM, which is the emerging markets ETF, and you can see the details there. For more of how I'm actually trading these particular positions, you can always visit me in our swing trade room. Go to our website, bullishbears.com, to learn more about signing up for our swing trade room to find out how I'm actually trading these stocks. My purpose of these videos is just show you whether I'm bullish or bearish on a particular stock and position. To find out about my exact actual trades, how I'm trading, you can also, let's say, visit me in our swing trade room. The majority of the trades that I put on are mostly some type of option strategy. All right. So I currently have a option strategy on gold, GLD, CNTTF. I actually own the stock. I actually buy shares, and every time we get a pullback, I buy more. EEM is also an option strategy that I am particularly in for to the bearish side. All right. These are my current watch list. MJ, which is a marijuana ETF. And as you can see, you guys, when you see green, that means those are the stocks that I'm bullish on. When you see red, those are the positions or securities that I am bearish on, which means I'll be looking to put some type of bearish trade on. Okay. All right. That's enough for the watch list. Enough for my closed positions. Enough for my active trades. I want to show you guys a couple of the charts on my active trades, just to let you guys see some things that I see, which is why I still like those positions. Before we get there, I'm going to do a quick review of the Dow Jones, let you guys see some things that look very, very negative in the Dow Jones. Okay, and I'll start with this. And I guess I only look at things on a bigger picture, so I look at the longer term aspect of things, not so much the shorter term. All right. One thing that I like to use in Thinkorswim is Fibonacci retracement, of course, but I also like to use parabolic SARs, which is the white dots you see in the screen, and I'll try to annotate a couple of those for you so you'll see exactly what I'm looking at. So these white dots pretty much are called parabolic SARs, and it gives you, it lets you know the momentum in the particular security at that particular time frame. All right. So as you can see, when the parabolic SARs are on top, it's showing you that there's some type of downward pressure on the security or that stock during that time frame. And when you see them switch over to the bottom, that's normally a bullish move, bullish bet. Prices are heading higher. So on this weekly chart, weekly and monthly, I look at those, really pay attention to those because those are strong trends. We got our first parabolic SAR on the top, which means that there could be some downward movement in the overall indices over the next couple of days and weeks or so. All right. Now, I'm going to look at show you guys a longer term picture too, to let you guys see this type of setup that I'm seeing within the market. And it's not a very good bullish one at this time frame, this time that we're in. All right, so that's the weekly chart on the Dow Jones over the past 3 years. Now let's take a look at it in, let's go to my stockcharts.com account. And a couple of things I want to point out here as well. I want you guys to really pay close attention to all of these areas where the market has been overbought. Overbought meaning above the 70 line of the RSI. It's normally an overbought territory. And a lot of times, depending on what's going on, we don't stay in overbought territory forever. Eventually, we're going to come out of that territory. So that's overbought territory that we're currently in now. This is the overbought territory that we were in between 2015 and 2016. Here's the overbought territory that we were in back in around 2006, 2007. And normally, after you see that such of a move, and we've been stuck in overbought territory for so long, we have a tendency to come out of that territory. And this is what you see when we come out of that territory. This is what normally happens when we come out of that territory. Let me come out of that territory. The market tends to want to trend downward. Same thing here. Trend downward. Okay, so are we trending downward next? Time will tell. But like I said, we don't stay in overbought territory forever. So time will tell. Nobody knows what happened, what's going to happen from day to day. But history has a habit of repeating itself. So I say that just to say always be prepared for whatever the market may bring you, because you can always make money regardless of what this market is doing when you learn how to take advantage of when the market is rising and what to do when the market is falling. A lot of people say, well, I'll continue to just buy stock while it's falling and eventually it'll go back up. Well, while it's falling, you can also make money. I mean, you can short stock. You can learn these option strategies, which we'll probably be trying to go more in depth with pretty soon in the near future on some other videos, just because the market may be having a reversal here. All right. But I just wanted to show you guys that. So be prepared, you guys, whatever may happen. History has a habit of repeating. So I don't want to harp on anymore to tell you guys what I think is going to happen, because I don't know. I know that history does have a habit of repeating itself. Okay, so keep that in mind and always be prepared for what may happen next. All right. So that's enough for Dow Jones. Enough for beating the dead horse. Just be prepared. Just don't be caught with your pants down. A lot of people, they continue to listen to all these big time analysts and stuff, and listen to all the stuff on news about, oh, we're in a bull market, we're in a bull market. Yes, we're in a bull market. But, eventually bull markets do retrace itself as well. So just be prepared for whatever may be happening in the longer picture. In this type of environment, I wanted to say one thing to you guys. Be very careful when you see we've been in such an overbought territory for so long. Be careful and mindful of possible dead cat bounces, which means, bear traps. And I'm going to show you something in Think or Swim real quick while that's on my mind. Let me get rid of some of these annotations here. Go to Think or Swim. This is Dow Jones. I'm going to go to the hourly current chart of the Dow Jones and point out a couple of things. All right. So this is going to show you a lot of action over the past week or so. Now, Friday, the market had a nice little bounce and started to move higher. Keep in mind, products moving higher, the market had a big old downturn and it dropped significantly. Okay, and we drop below major moving averages, drop below the 50, the 100, and the 200-day moving average, and then all of a sudden the market was higher on Friday. Now, what I want to point out is that when you drop below a 50, the 200-day, and the 100-day, all of those moving averages are very, very strong areas of resistance and support, depending on what side of the line you're on. So with that said, we got a big strong, yes, we did get a big strong move up on Friday. However, look at where the major moving averages lines are. 100 and 200. We ain't even got back to those yet. If we do get to these, it's going to be like freaking hell for the market to bounce above these. So what I'm saying is we may touch these levels, 50, 100, but until we break above them, be mindful of possible dead cat bounce. I don't think that this market is in a raising bull again, and you get caught, holding a falling knife because you think we're going to just bounce right through these major EMAs. Give the market some time to work itself out, clear these major EMAs before you go all out bullish again. That's just food for thought. Now, get rid of this. Real quick, let's take a look at some charts of my current positions. And one thing I want to point out, first of all, is GLD, the GLD ETF that I've been trading. And the current, I'm going to look at the daily and the weekly chart, because the hourly charts to me is just, especially when I'm a long-term trader, investor, I like to look at the longer-term picture. So I'm looking at the daily chart first of all, and I'll show you guys some things that I have noticed. We've been in the gold has been trending down for quite some time. However, one thing to pay close attention to is how, we've been starting to come out of this downtrend, and we finally made it and closed above the 50-day EMA, which is a huge success on a daily. Made it above the 50-day EMA. Now we're testing the 100-day. All right, so that's a good sign. In between the 50-day and the 100-day is a good sign. The market could continue higher. That's what the daily looks like. Let's take a look at the weekly chart real quick. GLD. And then the bullish signals in this area as well. There's that parabolic SARS I was telling you guys about earlier. Parabolic SAR on top, which means downward pressure. And we got our first parabolic SAR on the bottom on the weekly and a big green candle. That's a big bullish signal to me. So I got into this position last week with option strategies and a straight option as well. All right. So while we're still in, let's go to the next chart. Don't want this one anymore. Let's go to EEM. I'm sorry, not EEM, but let's go to the, Trend Spotter. Let's put in GLD. And what I noticed, I love Trend Spotter because the signals you guys, the Trend Spotter sends off are amazing. All right, it's a trend line that I was following. If we bounce above this strong weekly trend line, it's a definite bullish sign to me, and I'll be going hog. And we did. Big breakout to the upside on the weekly chart. Big green candle there. You look at the Bollinger Bands, they're starting to separate and spread apart. One's going that way, one's going this way. That's normally a big sign, depending on which way the candles are heading, and the candles are heading up. So that's a big, big bullish bet that the market is about to go higher. Okay, my first target is going to be 120, and I'm looking at that target over time, so maybe weeks and months to get to 120. But I'll be looking to stay into this position until we can reach my first target goal. All right. So the gold market looks kind of bullish at this point. All right. Now the next one that I am in is this CNTTF called Cantress Holdings. It's another cannabis company out of Canada. And one thing I still like about it, even though we're reaching an area that we've been at before, this top there, we're around this area now. But overall, the marijuana sector, you guys, I'm just loving it for long term. So, and I was telling somebody last week, I said, even though this market will have its pullbacks, when it does, that's when I buy more. See this one right here, you guys can see this yellow line in the middle here when I highlight it. That's the center of the Bollinger Band. This market has been trading around this Bollinger Band and bouncing off of it since August of this year. So it's been above this Bollinger Band. It's been trading, bouncing right off for a while. So I am still bullish on this in the long term. And if you look at a CNTTF, You take a look at a monthly chart. Your monthly chart. It's not much history on here to see. Got parabolic stars on the bottom, ranging higher. My first target on this one is $15 over the next year. All right. So that's my bull bet on CNTTF, and I am a stock buyer in this one. No options for this one. I'm a stock buyer. And last but not least, one of my bearish trades, and I may be adding more depending on how this current week, upcoming week shakes out. So I may be adding some more bearish trades, but the emerging market bear ETF has been under pressure for a very long time. And with the way this market is trending, I think this pressure to the downside could continue. One thing that I noticed on a longer term monthly chart is that whenever you see I like this real quick, in the MACD, whenever you see a crossover on the longer term monthly or weekly charts, bearish crossover, that's a hint, hint. And look at the TTM squeeze on this monthly. There was strong momentum to the upside, and then like the momentum is starting to die out. And what happens next when you get down to the last blue bar? Majority of the time, you start to see what you see here, red to yellow. So I'm looking for some red to yellow to happen on a monthly. So for the next several months, EEM still could remain under pressure if you look at the monthly charts. And we're about to break below the 50-day moving average line on the monthly chart, right there. Okay. Let's get rid of this. Get rid of you. Let's put this weekly back up. And as you can see, the weekly chart looks like it's still showing some downward pressure. Okay. So that's my bearish trade, EEM, and if you look at it, and Trend Spotter, it hit this line, it hit the trend line down here. It actually broke below it, but then it got a little bounce on Friday. I don't think that's going to last, so I am still bearish on this position. Here's the weekly chart. Weekly chart on Trend Spotter shows a definite downward channel that is forming. Downward channel that's forming. I think the downward channel will more than likely continue. So I will remain bearish on this position for quite some time. All right, folks, that is my weekly update. Hopefully you guys gain something from this. If you guys want to know exactly what I'm trading, how I'm trading it, this is stocks that I'm in. You want to go know how I am taking advantage of, of a bearish position or bullish position. Visit me in our swing trade room. For those of you who have not became part of our swing trade room, visit our website at www.bullishbears.com and learn more about the Bullish Bears and the Bullish Bears team. Different trade rooms that we have. We have room for swing traders, we have day traders, and we even have futures room. So there's a lot going on in the Bullish Bears team. Continue to follow us, you guys. Stop by our swing trade room. Learn more about about becoming a member of our swing trade rooms by visiting our website, www.bullishbears.com. Until next time, Tim Davis on the Bullish Bears team, signing off. And get ready, you guys, for another exciting week coming up. There's earnings coming up on this coming up week. And just be mindful and be careful of this volatility that's in reared its ugly head within the market. All right, have an awesome day, folks. See you guys on the next video.